Welcome to Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the SP 500. I'm going to cover the ASX 200, as well as gold, copper, uranium, and oil in a separate video. I'll leave a link for that in the description section below. I'm also going to tell you about a part of the market which I think is making the stocks generally vulnerable. So make sure you stick around for that. As always, this is general commentary, it doesn't take your personal situation into account. With all of that said, let's get into our first chart. So I'm going to start off with the S&P 500, and look, it's been another positive week for the market generally. Unsurprisingly, though, we're starting to see the S&P 500. We're starting to see the rally lose a bit of its intensity over the last week. And we can see this when we I'm going to put on a rate of change indicator. And what you can see when we put on the rate of change indicator down below is that it's not making new highs. It's not reaching the heights it was just a couple of weeks back. We've actually got a little bit of divergence creeping in where the S&P 500 is continuing to crawl itself to a new high over the last week, but this rate of change isn't keeping up. So maybe there's some sort of divergence starting to creep in there. And we really have had a big rally from the below the moving averages to above the moving averages. And when you get that, some sort of mean reversion is often something that comes in. And I think we're probably not too far off from that at the moment. And it's also interesting to look at the participation that we've had in the market during this rally in the S&P 500. So we have a look at this. So this is the S&P 500 up above, and down below, this indicator is showing the number of S&P 500 stocks above their 20-day moving average. And you can see we're reaching up into this, reaching up to 90% of stocks being above their 20-day moving average. Interesting to look at this indicator over previous years, and it doesn't get to 90 too often. Maybe once or so a year it will get up to this sort of level, and typically doesn't stay up here that long. It's important to realize, though, this isn't an indicator you look at for a big trend change. It's more just for a pause in a trend, and you work through some of these periods from the past. You can see sometimes the pause is only relatively brief and shallow. That's what I'd suspect is probably what would look for on this occasion. Just a pause, maybe a brief sort of pullback, not a large trend reversal. We look at other indicators for that sort of thing. But look, it's something to be aware of, that we are up in a fairly high region at the moment, often associated with a temporary pause. Interesting to come back over and have a look at the Nasdaq as well, and also just leaving this rate of change indicator on. You can see again the Nasdaq's made a new high, also getting itself above the July high. But the rate of change just from the most recent high a couple of weeks ago, market's broken above there, but the rate of change is starting to come off. So just a sign of a price action which is maybe getting a little bit tired, getting close to some sort of a pullback, maybe a pullback towards these rising moving averages, maybe filling this gap. Let me just get rid of that rate of change, get a bit more room in the chart. Maybe even filling this gap. That's price action, which often happens after a market's had an extended move, gets some sort of an exhaustion gap perhaps, and the market then comes back, fills that gap, comes back to the averages, and then we look at the possibility of like a continued rally from there. But for now, it looks like to me that some sort of pause is probably getting close. I think the weak spot in this market, it still remains that lack of breadth across the markets generally. Yes, a lot of stocks have had a run up, as we've seen in that S&P 500 percentage of stocks above their 20-day moving average. But when we look at something like an equal weight index, you can really start to see that breadth does remain an issue. So let's just have a look at the Nasdaq, a Nasdaq equal weighted index. So this is an equal weight of the Nasdaq 100. So valuing each stock at the same weighting, And where we've got the Nasdaq making a new high. So just coming quickly back to this Nasdaq. Just looking at this, so the Nasdaq's broken above its July high and it's zeroing in. It's closing in rapidly on its 2021 high. When you come over to the equal weight index, it's not even back at the July high and well off what we saw in November. So this remains I think the biggest issue for the market, in that the rally it's a narrow rally, and we've got the same thing playing out in the SP 500. I think the play here is to continue to approach this market from the long side. We need to respect that price remains above rising moving averages in both the Nasdaq and the S&P 500. We've got rising moving averages, prices above. So it's not about trying to call a big top. I think the play is to go with that overall momentum. But I think because this rally is lacking participation, it's a rally that I think requires extra caution and keeping a tight rein on risk. And now, look, if you're getting some value, please hit that like button. Please leave a short comment. Just tells YouTube you're watching, and YouTube shows other people. Hit that subscribe button also if you haven't already done so. Now, just to finish up, a quick look at the micro caps. I often talk about the small caps, the Russell 2000. Another area of interest is the micro caps, and this is an ETF, the iShares Micro Cap ETF. IWC is code, and this really demonstrates what I mean by lack of participation. So just looking at this, it's like it's an undeniable downward trend, and we've got the Nasdaq closing in on a new all-time high. But look at the micro caps; it is a part of the market, and it's very much out of sync with what we're seeing in the mega caps. And this is the same when you look at the Russell 2000 as well. They're markets which aren't trending higher. It's below declining moving averages. It's retesting an overhead resistance area at around 100. At this stage, I think we've got to say this downward trend remains in place. Possible there could be a base could form in this current period, but we just don't have enough to say that's the case at the moment. And I think until we get more synchronized price action across all the indices, I think we need to tread carefully. As I say, I'm playing this from the long side, but I'm also holding higher levels of cash until we get these markets starting to move in a more uniform and consistent direction, where we can see those trends across various indices. Well, look, let's leave that there for this week. Thank you for joining me. Hopefully that's been helpful. I look forward to coming back and talking to you next week. Till then, bye for now.